Welcome to the latest episode of our Sound of Finance podcast. My name is James Williams, and I'm a senior consultant at zeb Consulting. And I'm joined today by Fredrik Wilhelmsson, a senior manager at zeb in our Zurich office, as well as Mikael Flod, a senior manager at our Stockholm office. Today we'll be discussing financial crime prevention with a focus on AML. Welcome, Fredrik. Welcome, Mikael.
Thank you, James. It's a real pleasure to join you and the Sound of Finance.
Likewise. Thank you, James.
Well, thank you both for sitting down with me to talk a little bit about money laundering and the role banks play in detecting and preventing it. We certainly know this topic has garnered a considerable amount of attention in recent years. I would say not just within the financial industry, but in politics and news media as well. So a hot topic that we have to discuss today. Why don't we start off by having you both tell us a bit about your experience from working with AML?
Sure, I can go ahead here. I come from the regulatory background, so my interactions with the AML topic has been primarily from the regulatory perspective. What I do is I support financial institutions in developing governance frameworks, processes, methods to manage the various AML challenges posed by the regulatory requirements, also advising clients on specific AML-related topics.
Fredrik, how about you?
So my background and experience within AML goes to when I just graduated from university and I was enrolled in Nordea's graduate program within the transaction banking space. And that was just when they had received their first AML fine. So it was a truly sort of hectic environment, but it meant that I got to be part of building the first automated AML and transaction surveillance solutions, which was quite the journey. And then after that, and now sort of in recent years, I've been working with compliance within zeb, primarily supporting large financial institutions in this space of building automated scoring or screening solutions and making those initial solutions that are sort of building up at Nordea more sophisticated and advanced. So it's essentially sort of a focus of trying to sort of make the AML controls and the monitoring becoming sort of both more efficient and effective.
Now, before we get any further, and I'm sure most of our listeners will be familiar with the term AML, but for those that aren't, perhaps it would be good if we clarified exactly what is meant when we talk about AML. And I'm coming specifically from a banking context here. So, Fredrik, could you give us a quick overview of what it means?
Yeah, James, I think that sounds like a sensible start, especially for the listeners that doesn't know too much about anti-money laundering and money laundering. So maybe what we can do is that let's start by defining what is money laundering. And then we can sort of briefly maybe sort of cover what is the controls that needs to be applied by the bank in order to detect and prevent it. So if we sort of start with money laundering is a crime. It's an illegal process of making money that have been generated by a criminal activity. And there are 22 different offenses here that is laid out by the 6th AML directive, with the latest ones being cybercrime and environmental crime. So if you're conducting drug trafficking, fraud, as an example, it's the process of trying to make the money that you generated from these offenses to appear as a legitimate source. So how do you do that? Well, I mean, you do that in 3 steps typically. So first you have what we refer to as placement. So placement is sort of placing the money, the dirty money, into the financial system. And then you move into the second step, which is layering, which is then trying to conceal this type of money through a series of transactions and bookkeeping tricks. So essentially moving the money to various accounts through the financial system. And that can be sort of within the bank, but it also sort of then can go outside of the bank into other financial institutions. And the last step is called integration, where you then take the laundered money and then you put it in and make it, and that can be be used for whatever purposes, like the sale or trade of a real estate or securities or other types of assets. So that's really what money laundering is. And as a bank, you have an obligation to know your customer base. So have an understanding for what will they do. and where does the money come from, and who are the owners behind a company, etc. And also sort of try and make sense of this whole picture. So does it all add up at the end? And then you need to monitor your customer behavior. So you need to monitor the customer behavior and the transactional behavior to identify potential suspicious activities. And if you detect that, you then need to report that into the financial intelligence unit. So that is, for instance, in Switzerland, that would be MROS.
I think maybe it can be interesting also to mention the other side of money laundering, which you're not really talking about today, which is terrorism financing. So if money laundering is about making dirty money clean, then you also have anti-terrorism financing, which is about making clean money become dirty by financing terrorism activities. So it's basically two, as Fredrik said, it's two different logics. One is about getting stuff into the financial system, and one is about getting stuff out of the financial system.
Well, you're talking about it in terms of criminal offenses. Money laundering is obviously a criminal offense. So I'm wondering, why is this then relevant for financial institutions? I think especially in the media, and I'm thinking of several popular television series here, money laundering is often portrayed as more of an issue that the police need to take care of.
Yes, I think the crime, banks are not here to fight the crime, the source of the dirty money. But what the regulators are trying to do is, of course, to have the banks take a larger responsibility for sort of preventing crime by making it much, much more harder to actually reap the benefits, reap the profits of the criminal activity. And this is, I think, is something we've seen where because what happens is that the banks are tightening up their measures and their preventive activities. And what we can see then is that criminals are moving away to other sources of generating clean money, such as payments, exchange services, luxury goods, etc., etc. So I think it's safe to say that it's having an effect on the behavior of criminals. It's making it harder and harder. And I think we should, of course, also mention corruption when we talk about AML. It's not just about fighting street crime. It's also about trying to make it harder and harder for corruption within the governments, etc., etc.
I can imagine a lot of white-collar crime is involved, especially in money laundering as well.
Tax evasion, of course.
Tax evasion. Yes. Okay, so, well, we know there are plenty of regulations that banks need to comply with. But especially recently, it seems like money laundering legislation has, as I mentioned earlier, garnered a special degree of attention from media, also from regulators, and even from banking executives. Why is that? Can you tell me a little bit about where this focus is coming from?
Yes, I think it's interesting that you mentioned a few different perspectives here, and I think they perhaps all have a different angle to money laundering. If we look from the regulatory perspective, this is of course driven by a political ambition or a political agenda, where I think it's the political system that sees that crime, corruption, etc. Are all fundamental threats to the political and democratic system as such. And I think that is why we've recently seen that the AML topic is very high on the agenda, both in the political system and then translating into the regulatory world. So I think this is fundamentally driven by an agenda from states and governments to ensure the proper functioning of the democratic systems. So it's a very fundamental basis driving these topics.
No, and I would completely agree to that. I think what we can do is we can add sort of the banking perspective to it. And I mean, here there are multiple reasons why the topic is receiving such high degree of attention for banks. I think if we start by looking at just sort of the fines, so take ING as an example, huge, 900 million USD, failing both AML and sanctions controls. And now Danske Bank, who's really sort of in the talks here and has been, hitting the media headlines. It hasn't yet been confirmed and set, but it's discussions or the talks of billions of dollars. So huge fines, which is, of course, receiving a lot of attention and something that you as a banking executive want to avoid. But also, as a banking executive, we also need to remember that you are personally on the line and liable. And you're sort of running the risk of being personally prosecuted if your bank is failing these controls. So that's quite the incentive. So if you take, for instance, if we take Danske Bank here as an example again, and you have Thomas Borgen, the former CEO, and Danske Bank is one of the well-known sort of money laundering cases in recent times, at least. Now, he was personally prosecuted. And I think, Mikael, his charges was dropped. Was it in May? I think it was.
Yes.
Well, somewhere sort of around that time frame. But even though he is not he's no longer prosecuted, both him and the former Swedbank CEO paid the price for the job. So definitely something which sort of is a consideration. And as well, if you look at sort of other types of measures that a regulator can take, they can ultimately sort of strip a bank's license to operate, which essentially means game over. And that is, of course, a very sort of extreme measure. But before you would sort of run into such a scenario, it's more likely that your business operation is going to run into problems. So again, if we take Danske Bank as one of the examples here, and with the Estonian subsidiary in, I think it was 2015, you then had Bank of America and Deutsche Bank removing them from their correspondent banking network. So essentially sort of deciding that we're not going to clear your foreign currency transactions. And that's a trend. And we have sort of witnessed now Deutsche Bank reducing their correspondent banking operations. So if you fail that, and you fail that for a US bank, it's not going to be that other correspondent banks is going to sort of queue up to onboard you into that. Into their correspondent banking network.
I think it's safe to say that AML is the main regulatory risk facing banks today. I believe that's quite safe to say, looking both in terms of probability and impact, which we have seen now in multiple cases.
I think I'd like to return to the topics of Danske and Swedbank maybe a little bit later, and Nordic banks in general. But before we drift too far away from the topic, just like to pick up on one of the points you made and ask, are there any major regulatory updates on the horizon? Should banks be expecting major changes to the playing field? I think, Mikael, that's your field of expertise, if you want to comment.
Yeah, I think what we've seen in the late, the AML directives, they're sort of like a cliffhanger. There's a new directive coming into force every second year or so. What we've seen lately in the fifth and sixth directive, I would say, is more an approach to fine-tuning the AML frameworks. They extend the scope of application, including new entities such as fine arts brokers, real estate brokers, and also fine-tuning some of the regulatory requirements. I would be a bit surprised if there were completely new concepts or methods being introduced in regulations in the coming years. I think it's more and more about keeping in front, or trying to keep up with the development. We also see new asset classes being introduced, such as virtual currencies, etc. I think that will certainly garner some attention from the regulatory perspective. What's interesting to see is, I read a bit about this the other day, that I think it was a year ago that the European Commission announced its new AML action plan, and it was actually supposed to have been presented in more detail a day or so ago, but I haven't really found anything yet. And what we can see there is a I would say, a continued approach to harmonization within the European Union. One issue that has been lifted or highlighted is of course, the diverging integrations of the directives in the various member states. And there is an ongoing discussion whether or not at least some of the regulatory requirements should be transferred from directives into regulations, that way ensuring a more coherent approach within the member states of the implementation. There's also an interesting discussion about actually introducing a sort of common European AML authority, sort of a watchdog, which to my understanding would focus on some of the, I would say, high-risk banks. Preferably, I would understand this as being the ones that are international, perhaps having operations in certain jurisdictions, etc., etc. And there are other measures being discussed as well. So I think going forward in the coming years, we will see a more harmonized and perhaps more centralized approach from the regulator in how they enforce the regulations and how this is implemented in the various countries. But I would be surprised if there were completely new sort of regulatory concepts being introduced to the AML frameworks. So it will definitely be interesting to keep an eye on what's going on, keep track of this and monitor this going forward. I think all banking institutions should do this. But I would be relatively safe to say that the core fundamentals of the AML framework would remain relatively unchanged.
Fredrik, anything to add to that?
No, I think I would agree to what Mikael was saying. I mean, if I look at the regulatory trends and sort of where we're going, it's about enabling collaboration between financial institutions. It's very difficult for a sole financial institution to fight money laundering, but as a team collaborating, that is then something which can be done. And it's also about sort of trying to create transparency. So if that is done through beneficial ownership repositories or registers, and then making sure that the data quality of these repositories are to a state which is then something that can be used and with sort of the sufficient quality to incorporate that into the monitoring. So I would say that sort of that is the trend that I would see when it comes to sort of the regulatory agenda.
And just to mention, I think that this is actually something that can be positive for many of, at least the big international players. Currently, there are 27 member states in the European Union, which each having adopted or implemented the AML directives with slightly various approaches. Having more centralization and a more harmonized both regulation but also supervision, I think it could actually benefit the banks. It will have one single level playing field for them.
Easier, especially for banks that operate in multiple jurisdictions.
Exactly.
Yeah.
Exactly.
It also strikes me as a bit of an arms race between increasingly sophisticated money launderers and the harmonization and regulation that's going on. And as Fredrik mentioned, the increasing transparency and data quality.
I think it's also an outcome of perhaps certain actors within the European Union not having full trust in each of the single member states. We've seen some instances now that the European authorities have been sort of also checking on what did the local supervisory authorities do in some of these instances where huge AML scandals have been rolled up.
And on that topic, Fredrik mentioned earlier a couple of examples. Danske Bank, one of the largest money laundering scandals in European history just recently. Swedbank last year hit with a nearly $400 million fine. Deutsche Bank just recently, I think it was in May, had to replace their head of anti-money laundering. I mean, the list goes on and on. So I guess I'm wondering, why are banks struggling so much to tackle what is obviously a very important topic, a very salient topic, both politically and financially?
Well, I think so, sort of, first of all, is the just sheer complexity of this topic. So as a bank, you need to apply what is referred to as a risk-based control. So there will be a difference, let's say if you're a local Sparkassen or a Kantonalbanken versus if you're a global international bank that is serving a variety of customers with a wide product portfolio. So the controls that you deploy need to be adapted then to the type of business and the type of service offering that you have. And if you have a large operation and a client base, this is not an easy mandate. You need to understand each and every single product that you're offering and how this product can be used for money laundering. And then you need to scrutinize that product accordingly. And that's not an easy mandate. And then in addition to that, money laundering is taking shapes in various ways. So there's an ambiguity of when is actually money laundering being conducted. So if we take sort of a retail scenario where you have a single or like a smaller group of individuals that are committing an illicit or criminal act. Let's say, for instance, that they are selling drugs. This would typically be sort of a lesser sophistication, easier for the bank and a money laundering officer to spot. Because if you were to do such an activity, you're either sort of going to have a huge amount of cash that you cannot really back up with salary statements or other forms of explanations, or you're going to have instant payments like Swift or Twint or alike that is then coming in to your account, which you can't back up either, right? At a certain point, it's the inflows are just too high. So typically, those type of activities is something that the banks can spot and they can report. Now, these are not really the cases that are sort of making the headlines, right? If we take sort of more sophisticated examples of money laundering going on, like the Russian laundromat or the Moldovan laundromat, these are of much greater sophistication. So on the surface, it might look like the transaction and the banking behavior is legitimate, but behind that is a level of sophistication that is really hard to grasp, where there are multiple companies that are set up that are then creating invoices to make it seem like they have a legitimate business. But essentially what they're doing is they are creating this complex ownership structure, which is very difficult to scrutinize as a bank and get an understanding for. And as a money launderer or money laundering officer, if you are presented with this case, it's not super clear that you would be able to understand that this is money laundering going on. You would essentially be presented with a setup which looks like a legitimate business with economic purpose.
And Mikael, maybe you can talk a little bit about the cultural challenge that's associated with anti-money laundering in banks.
Yeah, I mean, you can talk about several challenges when you talk about the AML perspective, and I think the culture is we can trace it as culture at least, because what the banks need to do in order to detect and avoid and mitigate the money laundering risk is, of course, to have more controls in place. You need to have a much more sophisticated onboarding. You need to ask your client a lot of questions. You really need to understand your clients. As Fredrik say, if it's a corporate client with a complex ownership structure, the bank actually needs to get down into the details and understand who are the ultimate beneficial owners behind this. Once the clients start making transactions, making banking business, you need to monitor it. You need to talk to the clients. You need to see whether could this transaction be a suspected money laundering activity or not? And this, I think, it to some extent goes against the fundamental logic of banking business as we see today, where you want to have a very smooth, swift onboarding process, basically a seamless process where a client can become a client, or a company or a individual can become a client instantly. And once you have the client, you want to be able to provide a really, really smooth banking service, not asking questions, not delaying transactions, etc., etc. So the AML regulations are basically requiring banks to go against some of their fundamental business drivers. I think this is changing a bit, just from what I can see on the ground. There used to be more resistance, I think. Nowadays, I would say that the AML agenda is high on the executive levels, high on the board agendas. I know that many banks are incorporating KPIs, incentives, etc., to actually perform the various AML activities. But still, you have this fundamental conflict between regulatory requirements and the business drivers. And I think that is and that remains a core challenge when talking about AML.
No, I think I completely agree to that. And just maybe to share one example from a large universal bank. So in talks with one of the relationship managers there, he was saying that when you meet a client, you have a target for where you need to follow up on, for instance, the ownership structure. So you need to ask questions like, have the beneficial ownership structure changed since the last time it was reported? And if you are not following up on these controls, they immediately deduct from your bonus. And if you don't meet your targets, this is then looked upon very seriously. So I completely agree with your point there, Mikael, that it's sort of incorporated into the KPIs and the way that sort of incentives are being set.
It sounds like banks are taking a number of steps to ensure that this cultural change happens as quickly as possible in order to be compliant with the regulations. You know, oftentimes when we talk about cultural change, it can take some time to integrate. But now turning towards Mikael, based as you are in ZDB's Stockholm office, I'm thinking about Nordic banks in particular. What can you tell us about the anti-money laundering situation in the Nordics?
I mean, we had some high-profile cases here. I think Danske Bank and Swedbank are definitely at the top, and I think that has definitely had an impact on the banks here in the Nordics. I'm talking specifically from the Swedish perspective. One figure, so I think the banks have taken several measures to mitigate this situation, and one is, of course, a significant increase in the resources, the headcount working with AML topics. Someone dropped me a figure. I'm not 100% sure if it's correct or not, but apparently Nordea, I think they increased the amount of AML officers from 160 to 1,500 in a few years. And I also see that the banks are recruiting aggressively to fill this resource gap. So that is one thing, beefing up the organization in terms of headcount. I believe there is also a bit of reorganization being done where AML historically was something that was monitored in the second line within compliance, within risk. What we've seen is a bit of transfer where more and more AML controls and activities are transferred to the first line. I think that is both from the cultural perspective, getting the business also involved in AML controls. I think it's driving that. Another thing is, of course, some of the banks making fundamental changes in their strategy, or at least in the geographical locations in which they operate. For instance, some of the Nordic banks have ceased their operations in the Baltics, perhaps not entirely driven by the AML risk, but it's definitely a fact that some banks are leaving these quite profitable markets. Another interesting trend, I don't think any of this is actually unique for the Nordics, but what we see here is also an increase in collaboration between the banks. And a specific example that's interesting to mention is what was originally named the Nordic KYC utility, which is basically a collaboration between the 5-6 big banks, where they set up a common entity centralizing the KYC operations for all of the Nordic banks. Benefits, of course, is that you get a standardized process, you get standardized data sets, and you get, of course, a cost sharing. So there are many drivers behind that. But so I think that is an interesting, and I think that is something that will continue going forward.
So to add to what Mikael was saying here around sort of the headcount, I recognize the increase in staff that we have witnessed, not just for Nordea, but for other banks as well. So going forward from here, technology is going to play an ever more important role. And it will not be possible to add more resources into the operation, but rather it will be that we see technology taking part in the operation and then using the resources in a much more clever way. And I think we will talk about this a bit more. We have a white paper that is out on this, deploying advanced analytics within the AML operations. But technology is not just something that is going to be a thing for the Nordics, even though Nordics are exploring with this topic, but it's something that we will witness across the industry as a whole. So technology will help, but I think what banks need to do in addition to that is become much more precise when they talk about the risk assessments. And that needs to be done in a way that it's really sort of into the dirt. So it cannot be that the risk assessments are a paper product, but rather that it's based on data quantitatively, and it's being continuously tested, validated, and considered. And this will be fundamental in order to get technology right. And it's also about learning from that and then looking to see, okay, so based on these learnings, what is sort of our risk appetite to this? And this is definitely something that will be a thing, not just for the Nordic banks, but sort of across the industry as a whole as well.
Well, it sounds like you've anticipated my next question, Fredrik. As you mentioned, you and some other of our colleagues recently produced a white paper on your experiences working with anti-money laundering, and particularly focused on fighting financial crime using advanced analytics. I wonder if you could just briefly outline some of your learnings that you explore in the paper, and especially what you discovered about the need for advanced analytics.
Well, I mean, if you look at sort of the starting point of the journey, so typically what you will see across banking institutions or banks and financial institutions are rule-based controls as being sort of the sole monitoring system. And the output of this system and these controls are far too many unwanted alerts. So that is what is referred to as false positives. And the result of that is very costly operations. And you can see that in the number of employees that have been hired that Mikael was referring to in the case of Nordea. So the scale of the AML operations have grown and the numbers have ballooned, yet the productivity of these systems, scrutinizing transactions and looking at sort of the behaviors of your client base, is very, very low. So while these rule-based controls are still playing an important role to a certain degree, and unless you're having a very sort of small operation, as a single instance, this is not enough. It's not effective, it's not efficient. So you need to look to sort of other measures. And this is where we see advanced analytics sort of taking or having a big potential for banks to reduce that operational burden.
Now, you're using the term advanced analytics, and I used that earlier as well, but maybe you can explain exactly what you mean when you say that.
Yeah, maybe we need to clarify that term a bit. So think of yourself as a large bank, right? So here you're going to have millions of transactions. You're going to have these transactions executed for various purposes. So be it a salary payment, a cash pooling if you're a large corporate. You're going to have wires to third parties, you're going to have securities transfers, etc. And connected to these transactions, you have various customer information points. All the information points that you've gathered through your Know Your Client questionnaire. And this then needs to be monitored to detect illicit behavior. So when I talk about advanced analytics, I'm talking about allowing a machine and a model to make sense of large data sets and sort of indicate where the relevant investigation should take place. And what can be sort of considered a normal banking activity, and what can be something that needs further investigations, and then also sort of learning from previous cases and events that have taken place. And in addition, we also sort of considered advanced analytics being something where you are presenting the facts and figures in a new way for end users so they can make sense of what they are seeing and sort of the output from these models. And that can be, for instance, sort of link analysis, it can be sort of data discovery tools. And oftentimes when we talk about sort of advanced analytics, we often sort of go into the field of machine learning modules. But it's essentially sort of being able to consume a large quantity of data, making sense of that data and presenting it in a way that can be digested and used by the end investigator.
Well, as we mentioned earlier, most banks aren't starting from nothing. There's already some anti-money laundering infrastructure in place. So let's say for the sake of argument that a bank already has existent rule-based controls that you mentioned earlier, but for whatever reason, be it an auditor or just internal standards, they've been deemed ineffective. What would supplementing advanced analytics look like for this bank? How would the implementation be approached?
Right. So, I mean, in ZEB, we have three strategic levels to this. So the first one is to say, let's get advanced analytics into the hands of an end investigator. And that is then, presenting them with a network analysis. So you can draw the networks between clients, and you can see how the flow of funds are being transferred, be it within sort of a client's relationship of his or her accounts, or then between different clients, and also incorporating external partners into that. That's sort of the first step. The second step is to add a layer of advanced analytics behind the rule-based model. And there, the machine learning model or the sophisticated advanced analytical model is taking the inputs from the rule-based scenarios, trying to make sense of what is being generated out of those rules, and look to see what are cases that can be classified as false positives, so can be closed, and what are cases that should be escalated to an investigator for further scrutiny and further investigation. So essentially sort of trying to reduce the operational impact by filtering out what shouldn't be looked at. And the third step is really sort of taking a greenfield approach when it comes to advanced analytics. So redesigning your entire control setup and then having a machine learning model at the core, and then building additional advanced analytics capabilities around that model, presenting then the end investigator and presenting the bank with a sort of a completely new capability and a completely new surveillance capability.
Well, it certainly sounds like there's more to it than simply changing out the software that's used by the bank. So what are some of the main challenges that you see when implementing and applying this advanced analytical approach?
Well, first of all, you're going to run into a problem where you're not going to have enough labels. So there's not enough money laundering that is going on. And I'm here not suggesting that there should be more going on. But if you look at the detection ratio, you're just going to have a limited set of data that you can model with. And at the same time, if you look at the data quality, and then I'm talking about sort of both quality from a sort of a completeness and an accuracy standpoint, but also the details. So the granularity of, for instance, the different types of transactions that are being processed, that is not always at the to a quality that is desirable to build such a model. And the mandate is huge. It's super complex. And you need to understand such a variety of products. So in order to do this, if we look at sort of what you need to consider as a bank, if you want to sort of set yourself on this journey, is to understand first the business and what are the products that you're having as part of your service and product offering. And you need to do that before you go into a development mode. And then once you do that, it's sort of the same lesson as for any advanced analytical deployment. It's really about make sure that you can generate value quickly and demonstrate that to banking executives. So you can show that you're making an impact. And where you make the most impact, well, I mean, we have already sort of indicated that throughout this talk. It's going to be in the low-touch, high-tech segments, and it's also likely where you're going to have the most labels that you can sort of model with. And once you have evidenced it, deploy it, roll it out, and then that's how you can sort of get it out into your organization and really sort of make a difference when it comes to advanced analytics. That's sort of the journey that we are recommending that you take as a bank.
Exciting times for anti-money laundering. So, Mikael, what's next? What's next in the world of anti-money laundering?
So, looking at it once again, then from the regulatory perspective, I would assume that banks will focus in the upcoming years not implementing regulatory requirements, but rather making sure that the measures in place are optimal, making it more efficient, as Fredrik mentioned, relying more on technology solutions rather than pure headcount. Basically getting the AML framework and the AML operations to run as efficiently and smoothly as possible, while also making sure to identify and avoid, mitigate the AML risks. And this will be an ongoing work. It's I don't think the banks will ever be finished with AML. The criminals and the scenarios will develop. The criminals will develop. Technology will develop. Just imagine the fact that we all of a sudden have a new currency or new asset class in terms of cryptocurrencies. I think there will be additional such game changers in the upcoming years that sort of change the dynamics of AML. But once again, I would be a bit surprised if there are regulatory requirements that forces the bank to operate in completely different ways in terms of money laundering.
And I completely agree there on the cryptocurrency. That's going to be a big topic when it comes to AML. I think I see continued investments into technology. Definitely, that's going to be one of the things that is going to be very high up on the agenda, but also on the collaboration that we already talked about. So, as a bank, as a financial institution, it's very difficult if you're alone. But if you partner up and you widen your insights and connect with other banks' data, you get a much clearer picture of what's going on. And this is not an easy journey, right? But I believe that this is something where we will see much more of, and is going to be exploring with these types of collaborations as we move forward. And then for us, so that's for the banks. For us as zeb, we are expanding our efforts in this field and looking for new colleagues to get on board with this journey. So we will continuously help to support if it's on the regulatory agenda side or if it's on the technology and implementation side, to make sure that these solutions are up to standard and implemented in a successful way for our clients.
Well, thanks so much, Fredrik and Mikael, for this really fascinating look into preventing financial crime. And I have to say, I'd love to have you back sometime for an update, should anything change.
Of course. More than happy.
Of course. Thank you.
That's all for this installment of Sound of Finance, a podcast series by zeb Consulting. You can find further discussions on other interesting topics in the world of finance at our website, zeb.consulting.com, and be sure to subscribe wherever you get your podcasts. We hope you enjoyed today's conversation, and we'll talk to you in the next episode.